Hi everyone, hope you're all doing well. Today I'm sharing my US portfolio. I did my UK one a few days ago, so now it's time for the US portfolio, and I share this every 3 months on the YouTube channel. So if you do want to see it on a monthly basis, I do it on a monthly basis on the Patreon, so to join that, link is in the description. I also post what I'm buying and selling in real time on there, as well as 2 exclusive videos a week. But on the YouTube channel, I do it every 3 months, and in fact, it's actually a month late. It should have actually been last month, but because of everything going a little bit crazy when I was supposed to do it, I just knocked it back a month. It was the week where we had the Fed reporting and then we had inflation. It was a little bit of a crazy one, so we knocked it back a month. So we're doing it this time round, and I know the struggles to do it this time round as well. It was this week's been a little bit crazy. There's a few things I wanted to talk about. I probably get a few weekend videos in to get everything done that I wanted to do. The likes of Card Factory going a little bit bonkers as well is where some of the video time went. So yeah, we're finally getting around to doing it. And the key thing why we do this series is that I've done it for 5 years on the channel. You can basically track my investments and how I'm doing. There's a little bit of accountability out there. I think that's the key thing that is really needed in the YouTube space when you're doing stock market picks, which are extremely hard to do. When you're putting your own picks out there and saying this is what I'm buying, and you're open for everyone to see how you're doing on the stock market. And I think it's always very easy to be a stock picker and kind of tuck it away and forget about it and never talk about it again and sell it out quietly in the background. But we try to do things a little bit different here. We try to be honest, we try to be transparent, and doing this series that I've done for like the last 5 years gives me that accountability where you can see how things are going. And especially in a bear market right now, when we've seen the Nasdaq down 33%, we've seen the S&P down 20%, when we've had a major crash in the market, I think right now it's very important to see how I'm doing, make sure that you can see how I'm positioning myself for when we have a big rally out of here. And you won't see many YouTubers doing that either, so I think that's really key. So let's get stuck onto this portfolio. As always, this doesn't include any stocks that have been sold out. These are obviously all my current active holdings, the ones that I'm still owning. So we start off with the DeGiro account. So on the DeGiro account that I have, I've got some Alibaba shares which are down 16%. Obviously Alibaba's had a rough couple of years. Previously this size of this position was actually double. I was up over 100% on Alibaba, which is crazy to think right now, and I sold out half my position. I kept the other half of it because I thought Alibaba's still going to be very successful in the next 5-10 years. And yeah, then from there it got an absolute beating, and it's been really hurt on the share price recently. It has been having a bit of a rally, as you can see here, so that's recovered some of the losses. And sometimes people forget that. People forget that they see a stock down and very quickly, within a 1 month, 2 month period, the stock rallies up 74%. That can happen in the stock market. And Alibaba was, it was down a little bit more than this, and then it's had this bit of a rally. And I'm still confident it'll do very well going forward. So yeah. Next up is Carnival. So Carnival is a stock that I've held since 2018. I bought that before the CV situation. At the time, the share price was getting a little bit hurt because of I think it was oil prices. I think there was some political tensions stopping Carnival to go down certain routes. And I thought this would be quite a good value play and collecting quite a nice dividend at the time. I think it was somewhere around a 4% dividend. Obviously the TV situation happened 2 years later, which is something that is obviously very hard to predict, and obviously that one hasn't worked out as what I was hoping to work out. But I think Carnival will still do well going forward. Obviously it still has major amounts of revenue and profits come back, which most of it should come back this year. And I think when that happens, we should see Carnival reflected on a fairer share price. And I think I'll get out of that one break even and just put that one down to a bit of bad luck, unfortunately. The next one is Celsius. So actually I think Celsius is up a bit more than this. I actually took this, all of these share prices were taken from like 2 days ago. So we've had a pretty good like Wednesday and Thursday since then. So a few of these share prices are up a bit more than what they are here. I was supposed to do it on Wednesday, but I think that's when we had the Card Factory video, so I knocked it back a couple of days. But yeah, Celsius is doing obviously really well, up 70%, and that's in a bear market, which is crazy. Overall with Celsius, I don't want to buy. I think the valuation is a little bit stretched at the moment. I've sold some out for good profit. I think about potentially selling more out for profit as I'm waiting to hear what's going on with this international expansion, and it hasn't been very clear. I've asked the investor relations, they haven't communicated with me what's going on. So yeah, I'm a little bit just on the fence at the moment with Celsius, and if anything, I'm probably pushing a little bit more to selling out of it. The next one is Meta. So I'm down 15% on Meta. Once again, this has had a pretty good month. But believe it or not, these are the shares that I've had in this account since 2018. So the fact that I'm down 15% after holding these shares for 4 years shows you, or nearly 5 years now I guess, shows you how beaten down that stock's been. So I've not really been buying in this account, I've been buying in my other account, but yeah, massively beaten down at the moment. Next one's Gang. So Gang is down 78%. My thoughts with Gang are, I think it's still, financially in the last 2 quarters, it's done okay. It could have done a little bit better. But apart from them 2 quarters, the other quarters have been absolutely amazing, and it's just been beaten down low and low on the share price, and it's crazy low valuations, even though that it's doing okay quarters now, not to what I was hoping for, but still okay. Because the valuation is so low on it, the quarters that it's doing now are actually still excellent because of the valuation. If we were talking about Gang where it was at, a year, 2 years ago when it was at, $20 plus, then it would have been a different story where it was like, okay, we need you to do a little bit better quarters. But because when you look at it, it's like something like 0.3 times sales, it's lower with market cap than what I paid for Coolbet, and Coolbet has done absolutely amazing. It's just insane. It's insane. So the only tricky issue I have with Gang is that I'm quite fully allocated on it, and I don't want to allocate more because at the end of the day, if something was to go wrong with Gang, I don't want to lose, 20% of a portfolio in one stock. So that's the other thing that I've got to be really careful about, is still keeping up quite a diversified portfolio. So I can afford to nibble at Gang, but I only can do it every so often. So I'll see where Gang comes in after the World Cup, the Q4 with the World Cup in, and the NFL season back. So that's where I'm at with that one. If it comes in with another good earnings quarter, I'll probably buy that one, but I think it's absolutely insanely valued at the moment. So yeah, Huya down 61%. Huya's obviously had a good month because of the China rebound. So it has recovered a fair bit at the moment. Obviously, there's still a little bit way to go, and it should do that. Obviously, hopefully, the Chinese government are a little bit more lenient than what they've been in last year. They've put a lot of restrictions in this gaming space, and that's really affected the stock, but hopefully they ease off a little bit. And yeah, same again, if the financials improve, I can buy a bit more Huya. It's basically the same story as kind of Gang. So yeah, the only problem with Huya is my upside, what I hope for them, has been a little bit more limited now because of the Chinese regulations that were slapped on it over the last year, which is a little bit of a pain. But yeah, I mean, obviously when you've got a company where you've got a cash balance that's higher than the market cap, it's absolutely ridiculous. JD.com up 230% on that one. Same again, it's a stock that I've held for 5-6 years now. I sold off half my position at 300% return, which was absolutely amazing. And yeah, I'm just happy to kind of hold those shares for the long term and see where that one goes. Microsoft, same again, I sold off about half my position about a year ago, maybe a year and a half ago. And still own obviously a really good chunk of Microsoft. Used to be my largest position, up 124%. Watching Microsoft, it is one of those stocks that doesn't seem to be rallying as much as the market. I would love to own a bit more. Valuation still a little bit high, but yeah, fantastic stock to probably those shares that I have, I probably hold forever. Pinterest up 7%. Yeah, this stock I sold out for like half my position out for like a 300% return, maybe like a year and a half ago, which is just once again absolutely insane returns. Happy to hold it right now. I think the future they have with revenue growth and profit growth is really good, so I'm happy to hold that one. TDoc down 78%. This one hasn't been performing as good as what I was hoping it to, and the other thing is that I've not been averaging down on it. The other thing is that I own HIMS. I'd rather buy more HIMS than TDoc because I think HIMS will outperform TDoc, so that's been the issue with that one at the moment. So that's just kind of a hold there at the moment. Visa up 47%. Yeah, same again, a stock I've held for quite a few years. Just one of those stocks I think I'll hold forever. And Disney down 12%. I would like to buy a little bit more Disney if I can in the next few months. So yeah, I'm happy with what I've got there. I think that one will do very well going forward. And then on to the Trading 212 account. So same again, we've got some Alibaba shares in here. We've covered that one. We've got some Google here, which I'm down 13% on. Obviously, I'm trying to build that into my largest position, so we'll see how that one does. Beyond Meat down 85%. This is only this is one of the stocks. There's 2 stocks in my whole portfolio that I'm worried about. Beyond Meat being one of them. Obviously negative gross margins. They have not a greatest balance sheet. The losses are getting bigger. The revenue's not growing. This whole meat space, fake meat space, vegan meat space has been declining in the last 12 months, which hasn't helped them. They've signed partnerships which haven't translated into the revenue, which is not great. So yeah, I am worried about that one. It's one of the 2 stocks that I am pretty much in the boat of that. We would need something very well to turn around for them to work out. So it's not good for that one at the moment. Corsair down 38%. Hoping this has a good year. Obviously was one of the first stocks to get hit by the logistic and freight issues that were going on at the moment. But if they put in a good 10% growth year and also go back to driving up that profitability a little bit this year, I hope that does work out, and I hopefully get a 50 to 100% return from that one, which is what the plan was. DraftKings down 52%, obviously my largest position, and I just want to keep buying more of this. I think it's even though I historically don't put a unprofitable company as my biggest position in the portfolio, when it's something like a DraftKings and they're able to cut the sales and marketing back easy, when you've got 10 states that are already profitable, when you're in a company that's proven that the model works in, say, the UK market, and is very successful, there's not much here I can doubt on it. And I think that even though it looks like it's down a fair bit, for DraftKings to pop up 100% from here won't take much. It won't take much at all. So I'm happy where that one is at the moment, and potentially might nibble a little bit more. EHang down 64%, so this is the highest risk stock that I have in my portfolio. Obviously they have very limited revenue at the moment, and they're waiting for certification so they can have their drones being used. When you look at the leader of drones in the space that it could be in the future, why would you not want to own a little bit of a part of the leader in the drone space? And if they get that certification, that stock should fly. So yeah, very high risk because obviously you're waiting for something that's out of your control, but I just wanted to have a little bit of exposure there, so we'll see if that one works out in 5-10 years time. Meta down 25%, maybe I'll buy a bit more, we'll see what happens there. Top Golf Callaway down 8%, I think actually since the last 2 days it's like break even now, but yeah, I might buy a little bit more Top Golf Callaway. Obviously the reason why I own that is because of the Top Golf locations, and I think very easy business model. The more they open these Top Golf locations, the profit they'll drive, revenue they'll drive. Top Golf Callaway will do very well in the next 5 years, and I expect it to double up. Hims up 14%. Obviously, I am a big fan of Hims. I actually think this one's up over 20% now. If I was off today prices, yeah, obviously, what's not to love? I think it was potentially my financially best performing stock in 2022. Like, the growth was insane, the drive to profitability was absolutely insane. The only issue I have now is that I've got a nice average. I can't really buy any more, so I just every so often I might nibble away at Hims. But yeah, absolute phenomenal company. I'm excited for where that goes in the next few years, and I generally hope, like, normally I buy stocks and I hope them to double up in the next 5-10 years. I'll look at Hims and I think that I'll be disappointed if it doesn't at least 5x in the next 5 years. That's how good it has done and how cheap it is. InMode up 95%. This was actually before preliminary earnings, so it is down a little bit less than this now. But yeah, InMode has done amazing. Obviously, a stock that I was up over 400% on, took a little bit of profit, but still think it can get back to them sort of days. I would expect a 5x return from InMode in the next 5 years, realistically. And yeah, obviously, when you look at the preliminary earnings where it dropped, they're absolutely insane. Absolutely insane. It's probably a video that I'm going to do in the next few days. So yeah, Lovesac up 16%. This is a very new stock that I'm trying to build into a position. I don't want it to be a mega large position, but yeah, I'd like it to be a bit bigger. The only issue now is that it's up 16%, so we'll have to see what happens there. Planet 13, which is down 81%. Once again, this is very, very high risk play, like at EHang. It's in the MJ space, and yeah, I just wanted to get a stock in this kind of space. Unfortunately, it's been hurt because of the environment that we've been in, and MJ sales being a little bit slower, but I think that it will turn around once we get into a better market for sure, and they seem to be still doing some of the right things. Financially could be doing a little bit better, but I think because of the environment that we're in, we can expect them not to be posting the best financials at the moment. Mercado Libre, I want to build it up into a bit of a mid-sized position. I'm kind of getting there, but I still want it to be probably double what it is right now. PayPal down 15%. Once again, Google is a stock that I want to be my largest position. I probably want PayPal to be my second largest position. So the more I can buy that one, I'll be really happy. Shopify down 43%. Obviously, this stock has been hit hard. I still think Shopify is a must in the next 5 years. It's not going anywhere. So if I can get my average down a little bit on this one, where I'm only down like 30 something percent, and I think once again it's like a Huyer in Alibaba. It's not hard for this sort of stock to sling up 30-40% in a couple of months, and hopefully I've capitalised on enough shares before it does that. And that's the exact same what I would say for Block as well. Skills down 95%, so this stock has been absolutely hurt massive amounts. The difference between like a Skills and when we get onto Tattoo Chef, which are the two stocks that I'm really worried about. Skills, I actually still have a bit of confidence in. They still have games that have been actively used. Obviously, there's been a bit of management doing the wrong things in the last year where they should have took the hard comps from the CV situation and didn't, and they put that into a lot of sales and marketing and they burnt through the cash, and now they're giving themselves even harder comps to do. But once they get out of that position, you look at the business and what they have, 95% gross margins. That's insane. It's fantastic gross margins. A lot of room there to play profitability, and as long as they can design and get back to where they were prior to that 2021 situation, obviously then they'll have a business that should do very well with them gross margins and bringing out games that helps increase the revenue as well. So yeah, I think that there's a bit of a turnaround plan underway there, and even though it's down massively at the moment and it's a really beaten stock, I do think they could potentially turn it around here. So not that I'm confidence enough where I can actually go buy some shares at the moment. I need to see them execute on that turnaround a little bit more from here, but yeah. And then we've got some TTCF. Obviously, what I said about Beyond, the two stocks that I am not confident on at the moment, and I would be quite happy to see the back of them. Obviously, the good thing with Tattoo Chef is that I did sell off a good chunk of my shares at break even, but really I should have took all of the shares at break even out of there. And then we've got some Tesla. I'm building up my Tesla position, as you can see here. I'm going to leave that over a long time frame because I think there could be still a bit more pain for Tesla going forward. So it should be quite easy to average down on that one at the moment. Obviously some Disney that we spoke about a little bit earlier, and then we've got some Turtle Beach, which is kind of very similar to the Corsair position. Hopefully they have a very good year after a lot of the tough comps they've had from the CV situation and the logistic issues. So we'll see what happens there. So yeah, overall, when I look at the portfolio, I'm quite happy where it's going. Not as happy as my UK portfolio. I think my UK portfolio is doing really well. In this portfolio, there's a few things that I would like to adjust slightly, but when I look at it here, I'm thinking well positioned here. The only ones that I'm kind of disappointed in here is CCL. I'd like to get out break even in that one, and T-Dot could potentially perform probably financially a bit better, but everything else in this portfolio I think is really well positioned for a rebound. In the Trading 2-1 portfolio, same again, I'm happy where everything's positioned really for a rebound. The only adjustments I'd like to make is Beyond Meat and Tattoo Chef. I'm not happy with them two at the moment, but everything else I think that when we get into a bit of a positive market, as we've seen in the last kind of week, some of these stocks have already started to slingshot, and the more that happens and we go into a bit more of a bullish market, a lot of these stocks will slingshot out, and it is very well positioned at the moment. There's a few stocks I'm watching. I'm thinking about making a stocks I'm watching video in a few days time. I was looking at JP Morgan the other day, and I was like, I'd like it to be maybe a little bit cheaper. I was looking at the likes of Datadog. I think that's a really interesting stock, but can it get to the CV prior to CV levels? That'd be interesting. Something like an AMD, I wouldn't mind a semiconductor play in here. I think that would be quite interesting. So there's a few stocks I'm kind of like looking at the moment, but maybe even Walgreens, but I don't know if I'd like to see the turnaround plan go a little bit better before I kind of add them in. But there's a few stocks I'm like weighing up potentially as well, added in at the moment, so we'll see what happens there. But I think I'll do that for a separate video. It's one of the videos that I want to do this week anyway. So yeah, I hope you enjoyed the update anyway, guys, and the transparency, especially in this bear market. If you could hit the like button if you're new around here, subscribe, and yeah, I'll do this portfolio on the YouTube channel in another 3 months time. And if you don't want to wait 3 months, I do it monthly, like I said, on the Patreon. So yeah, thanks for watching, catch you in a bit.